The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's get caught up on what is happening in this market trade at midweek as we saw the grains a little bit lower on the day Wednesday. Bean oil did pop higher, though. Mixed activity in livestock, crude oil up around 2%, while in late day trade Wednesday, the stock market giving back some of its gains as well. It's been a very volatile week here, especially on that stock market. I took a couple of days away from the markets, so we got to get caught up on a lot of things. Joining us now for a conversation, Mike Zuzolo with Global Commodity Analytics. Mike, good to talk with you again this week. And I was joking, talking to you today from the new Destin, Florida studios for Market Talk here. A little vacation, a little work for me this week. And as I mentioned, it's been a pretty volatile week across this market trade, hasn't it, Mike?
It has. And, if you need to do some in-studio recording, this would be the time that you and I could do that together, Jesse, so that, I get a little bit of real sunlight with beach and heat. Now, having said that, we hit 99, 100 degrees here earlier this week before the cool front went through in northeast Kansas. And driving back and forth from St. Louis to Atchison over the last 8 days, leaving about a week ago today, and then coming back this past Monday, really big hit to the crops. I mean, they're very stressed in the best parts of Missouri as far as the rain totals go over the next 30 days. But yeah, you're right. As far as the markets go today, it's an interesting dynamic because we saw the commodities kind of lead the equities in terms of what was happening. And, we had the cattle go up pretty nicely. Then they fell. They came back around on the close to a degree, in the fat cattle especially. But then the soybeans took out their last week's lows. And I was talking to subscribers and clients about this and saying, you shouldn't be doing this at this stage of the game until the USDA report, unless the outside markets haven't hit the pause button yet. And sure enough, as you and I are talking right now, we've got the equities markets heading lower. I just checked the charts before we went on the air here Wednesday late session, and we're looking at a S&P 500 that's getting very close to those last week's lows as well. So the soybeans, the S&P 500, is there any common theme there? And I think you can say that with what happened in the copper market. It was the leader to the downside, over 2% lower. I think we had some pretty nasty negative Chinese commodity imports and figures and economic data that came out on Tuesday night, early Wednesday morning, that is probably influencing both of them, both commodities and stocks. And right there along with it is a soybean complex, which was right above the copper in terms of percentage losses on Wednesday.
Let's examine that a little bit more. And I know as far as these financials, I saw a lot of the talk about the Bank of Japan and things like that, but specifically to your China point, US dollar, Chinese yuan, let's look at this correlation chart and walk us through some of the things you are watching here and some of that news out of China you mentioned.
Yeah, this is an important chart for the viewer, and especially the agriculture viewer. You and I have talked a lot about funds versus fundamentals, supply-demand fundamentals versus macro currency, investment sentiment fundamentals that I would classify as funds. This chart shows us a major support line for the US dollar against the official Chinese currency being violated. This corresponds almost perfectly with the top in the U.S. Treasury yields, U.S. equities market, and U.S. dollar. All three of them have been running higher, this past past year and a half. But the past week and a half, they have had a big turn to the downside. And this could be a trend change. That is a backbone type trend line support for the dollar against the Chinese yuan. So that's point number one. Funds and fundamentals are in play. They make more sense to the people I'm talking to nowadays because of what's happened the last week and a half, Jesse. But the maybe bigger point is this. That gain in the Chinese currency is about 2% when it was hitting its highs before the dollar bounced. The Japanese yen was up 10 to 14% up until Wednesday morning. That means the buying power, the importing power of China and Japan has increased 2 and 10% respectively. I think at some point, if the dollar continues to go lower, the funds and the investment community will start thinking about U.S. exports doing better going forward, not being hung up by U.S. China trade difficulties and a strong dollar. And just to kind of put the fine point on that, one of the big things that we've been held up in terms of agriculture commodities not following gold has been that currency market and that U.S. China trade frictions. And I think the Russian ruble going up against the dollar could only help us. The only thing that I would say that has not changed its trend has been the weakness in the Brazilian currency.
And I would say is so much of these outside market moves with currencies and more plays such a huge role into the commodities, and a lot of times plays into the different margins and just the farmers selling and exports, to your point, things like that. So let's look at the Dalian China soy crush margin. Pull up this chart as well. What are some things you're watching here, Mike?
Yeah, kind of bringing back around, and you're absolutely right. The supply demand fundamentals are still important, and then we're going to talk about that here. But we can't ignore the funds, the investment macro side. And I think, especially cattle clients and subscribers I'm working with, they really get it now after the last week and a half, especially with very strong cash cattle and cash feeders, and really nothing fundamentally to say we're losing business or we're losing demand. There's fears of that, but it's really about the equities markets and the shift in these currencies. But again, at some point, the Japanese will have a much fatter wallet to buy U.S. beef if their currency stays up 10 to 15% against the dollar. So this chart makes us understand why the soybean import number that China put out, their customs numbers that they put out Tuesday night, being January through July, the soybean imports total going into China 58.3 million tons. That was down about 1.5% versus Jan through July of last year. This chart helps explain why that is. And, they've been crushing in the red for the better part of the 5 months at this point, and we are heading towards those 2024 lows. This is one of the best charts to kind of indicate how poorly the Chinese agriculture situation is in terms of crushing and feeding livestock. But by the same token, these negative crush margins have made hogs more profitable to produce, and that's why we've had this big kick up in the Chinese hog industry, and hog prices and the poultry prices have also come back around. But that doesn't help the consumption and the demand. That actually hurts us. And so this is not a good supply demand number. And I think this is why, in part, why the soybeans have been the leader to the downside for pretty much the whole month of July and now starting into August.
Well, I think about this, and let's talk soy basis here a little bit. And I'd say a lot of U.S. farmers maybe have been selling old crop corn. I think the beans have mostly been out of the bin, but we've seen a lot of Brazilian farmers selling soybeans here is kind of the rumor I've seen as of late. But you take a look at spot soybean basis. You got a Toledo, Ohio chart here for us. I mean, talk about this side of the equation for us, Mike.
This is the tougher side of the equation, especially as referenced and compared to last year. It's all about bin space right now because we're heading into the 24 harvest. And I have been pretty surprised by the phone calls I've been getting and the emails I've been getting from both clients and subscribers, but especially from non-clients, non-subscribers that are just calling me saying, I have not sold hardly any beans for 2024. And I really have a lot of 2023 beans. I'm not shocked by the first statement, but not having a lot of 2023 beans sold really does shock me, and it puts me in a really tough spot because I think bin space commercially is going to be at a premium this coming fall, because not only do, as you say, we have corn being sold out, but we also have a lot more beans than probably last year at this point being sold out. So what this chart shows us is it's getting pretty tough in some key areas. And I like Toledo because it's a strong indicator of the demand side of the equation and the tight supplies in the country as a whole. And it's got a good cycle to it where it typically makes a cycle high in the second, early third quarter, and then pretty much goes down into harvest. And sometimes, like last year, it can really go down. So I have been on the phone, and I'd encourage producers who are listening or watching right now, give me a call on the toll-free number and ask me individually so I don't go out of compliance what I would recommend you do. But generally speaking, I think this may be an issue where especially if rains come here in the Corn Belt, Jesse, in the next 10 days, and we make the bean crop, I could see the basis really getting hammered potentially in some key critical areas like Toledo, Ohio. So basis contracts could be, and I stress could be, a viable alternative right now, especially for cash beans and especially going into the August 12th crop report.
We're talking with Mike Zuzolo from Global Commodity Analytics here today on Market Talk. Mike, let's look at the monthlies here for soybeans first. And you mentioned soybeans being the leader to the downside. Man, oh man, I take a look at this chart, and it's pretty easy to see this when you just look at the picture and don't really look at even at the data. But I know as you look at the data as well, there's a lot of indicators here kind of pointing to soybeans being the downside leader right now.
Yeah, they really are. And it goes back to China with the number 1, 2, 3 leaders to the downside. The last time I looked, copper, meal, and soybeans. And so pretty easy to see the footprint of the Chinese negativity. I think this chart and the next one that we'll look at in corn gives the producer the idea of, okay, we've really broken this market down hard. How much more could we really break it? I think that what we want to look at is the average trade guess, Jesse, in the USDA report Monday from both news wires combined is about 2.1 billion bushels when it comes to the corn and about, 460 million, 465, I think, when it comes to the soybeans. If you think about those numbers and you look at the price for trading, 1020 beans lead month versus 380, 390 corn, 380 as of today's close, 384, you really got to wonder if the trade is giving the corn ending stocks too big of a tightening, and by increasing the soybean ending stocks, are they making it too big? And so that's point number one when looking at this chart. Point number two is if we do go up in soybean ending stocks, and we did take out that 1019 low that we put in last week when the equities markets were crashing, we did that today on Wednesday. You open yourself up. How much to the downside? Well, technically speaking, that orange trend line that we see on this chart that is around 9.25, that goes all the way back to 2001. That chart has not been violated for 23 years. And I think that suggests to me that this could be the downside potential if we don't turn this thing around and if we do go ahead and continue down like we did in 2014.
Let's take a look at that corn chart as well. And case in point here, kind of the same story. You look at what this chart has done recently and a pretty sharp downturn here in corn as well, Mike.
Yeah, we still are higher by a little bit on the month as we went into today's close, Wednesday's close. We didn't take out the 378 low in the corn like we did in the beans. But again, that you're exactly right. That 345, 350 area is a lead month technical objective because it's really your next good solid support, and it is a long-term trend line drawn off the 2006 lows.
Well, overall, to kind of wrap up the grain thoughts here, then we'll talk a little bit about livestock. But I mean, your perspective, it just feels like this bearish trend doesn't want to end here in the grains, Mike. I mean, what should we really be thinking about right now?
I think we're really at a key juncture and kind of a confluence of the funds versus fundamentals. If we don't get a bearish report on the August 12th numbers, and if the dollar keeps going down, that may be the beginnings of a pretty strong signal that the funds want to get back into agriculture commodities. And it's been, what, a year and a half now, Jesse, that we've been waiting and waiting and waiting for this. It's been about the funds, and it's been about the Federal Reserve when it comes to the funds. And it looks like maybe we're crossing that Rubicon, and that confluence of those two things are coming together. I think that's really important as we close out this month.
Let's talk livestock a little bit. I know Monday was a terrible day in the cattle trade on the future side, and it looked like we've tried to stabilize a bit here the last couple of sessions. Let's walk through this chart, looking at cattle futures versus negotiated cash. What are some of the correlations you're watching here right now, Mike?
Yeah, notice the white line. That's your negotiated cash price, and that's going to be on the left-hand side where we closed at 193 on midday trade today. That's after having gone down to the May-June lows yesterday afternoon of 185. And you see the zigzagging and the wide range of this market ever since mid-June, Jesse, I think this is turning into more of a buyer packer market at this point. I would have expected the negotiated cash market to break a little bit after July 4th, but then come back around as we get close to Labor Day. And I think maybe that still can happen. But this chart kind of shows me that even if the futures goes down and if the cash goes down with it, we really are opening ourselves up to more downside in the equities markets. And so nowhere is the funds versus fundamentals more clear than in the cattle market. If you've got a 193 cash trade against a 182 August futures trade, that's almost a $10 premium in the cash. Why would you want to go and explore multi-month lows on the equity market break? And I think that's really the heart and soul of the funds versus fundamentals.
Does a zigzag pattern like this, does that traditionally indicate a top, for instance, or is that just kind of an anomaly on this type of a chart, Mike?
That's a wonderful question. If you look at the totality of that chart, there is no zigzagging pattern in 23 and before mid-year of 24. It's clearly looking for a top, in my opinion, by breaking back and forth like that in negotiated cash. And I think the ultimate driver here is, and one of the big differences between livestock and grains domestically, is we don't have the supply of cattle going up. We've got it going down. We don't know how much, though, because we don't know what kind of dress weights we're going to be facing here in the next couple months. But that zigzag pattern, I think, is a real battle between supply and demand. It's not about the demand and the tight supply anymore. It's about both of them kind of coming together and equaling themselves out. And I think this goes back to all those market talks we've done, Jesse, talking about consumption and demand.
Awesome stuff. I know you have a lot more available on your website. You folks can take a look at all of that and much more. Mike, how can people get in touch with you if they have questions with their marketing right now?
Well, as I said, I think that if you need to talk to me individually, call me toll free, 866-471-2588. If you didn't get that, just rewind the video and listen to it again, or go to globalcomresearch.com and sign up for a trial. I think it's a great time to sign up because we really are putting some pieces of the puzzle together, I think, in the analysis.
GlobalCom with 2Ms research.com. For Mike Zuzolo with Global Commodity Analytics. Mike, always a pleasure. Thanks for being with us here once again this week on Market Talk. And next time, I'll make sure to bring you to the beach with me.
Okay, sounds good. Thanks so much for always having me, Jesse. You're one of the best out there.
I appreciate it. Mike Zuzolo with Global Commodity Analytics joining us here today on Market Talk. That's going to do it for the show. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.